Rates fall below 7% this week. We're going to talk about why this happened, what to expect moving forward. Part of that is going to be inflation. We're going to cover that, including if you want to stay to the end, see AI go sideways and give me a mullet. You'll want to see it. It'll make you laugh, I promise. So this week, rates dropped back below 7%, Casey. And what happened? Well, you can see here, according to the charts, we're basically almost exactly where we were 1 month ago when we got the CPI report. That's Consumer Price Index. Well, how did it come back? The reason we had good news today, and you can see here, this was the day we got the report. See all that green? Green is good. That means lower interest rates. And the reason that it came back like that is because really inflation just came in at a line, like in with expectations, meaning it didn't go up. It just kind of stayed steady. Now, ultimately, the Fed wants this number here below 2%, and it's taking a long time to get there. So, Casey, what are interest rates going to do? Well, the Fed said they're going to wait to lower rates until one of two things happen. Either inflation comes down, that's this level, or unemployment goes up. Does that make sense? So you can see here, they want this at 2%, and they want unemployment to stay below 4.2%, which it is right now. And those are the two jobs that the Fed has. So what does this mean? It means that we're probably looking at higher interest rates for a longer period of time. That's the bottom line to all of this. But why is inflation taking so long to come down? Do you have any ideas, Casey? Okay,
no.
let's jump right in. What is causing inflation to linger? Well, this is a breakdown here, Consumer Price Index, and there's a lot of numbers here. I'm just going to point us to two things, okay? Right now, we're at 3.62% year over year on the core, which strips out gas and food prices. So the majority of what is causing inflation to stay high for a longer period of time is shelter. This would be rents and car insurance. Casey, has your car insurance gone up this year? So is mine.
Can't believe it.
Through the roof. Do you know,
Yeah.
It's really fascinating. Part of the reason why, did you know that they're putting so many chips in bumpers now? So like if you just get in a fender bender and you need a new bumper, there's airbag chips, there's cameras in the bumpers now. There's like more signals to, just cars are a lot smarter.
Bumpers.
Yeah. And so that it's costing also because car insurance went up. What are a lot more people doing? Not having car insurance. So now you're having accidents happening where people don't have car insurance, which just costs everybody more,
Yikes.
right? So our rates are going up. So car insurance, Look at this, up 22% this year so far, year over year. That's a massive increase. Bottom line, Casey, if we take out car insurance, if we take out owner estimated rent, if we take out shelter cost, 0.25% of this 3.62% is the stuff that we're actually paying for. Like stuff that we buy, like stuff that I pay for on Amazon, which just means that people are not buying much besides groceries and gas right now. In fact, retail sales came back this week and it came back really low. This is a lot of information here. We don't really need to jump into it, but Casey, have you heard of these buy now, pay later programs?
Sure.
Buy now, pay later. So over 43% of people using those buy now, pay later programs are delinquent. And they said that they're using them because their credit cards are maxed out. We just hit a new high on credit card debt. So there's signs right now that perhaps the economy is starting to slow down, at least consumer spending. All the savings that we had from the pandemic has run out. We don't have lots of people do not have all this extra money left to spend, and they're overextending themselves. In fact, it's kind of concerning how many people are starting to use buy now, pay later, just even for things like groceries. So what does that mean? The Fed is looking.
What does this mean?
Either unemployment to go up or inflation to come down. Those things are going to happen, but it's going to take a while longer. So in the meantime, there is an opportunity for clients, for people that we work with to buy homes right now, because it's still tough to buy a home and home prices are still going up, even with as many people sitting on the sidelines right now. Do you have clients sitting on the sidelines, Casey, that are waiting for rates to come down?
Yeah.
So do I. And the thing is that once rates come down, more people are going to be able to afford homes, and there will be more demand, which will just cause home prices to continue to rise for the foreseeable future. So, to you, if you are thinking about purchasing a home in 2024 or 2025, there is a lot of bad information coming out right now from the media, which we'll go into in the coming weeks. We'll talk about renting versus buying. Is it better to rent, buy right now? We're going to look into all that, so subscribe if you want to hear more about these things. But there's an opportunity right now, Casey, for our clients, which is, it's almost tomato type deal. Do you want to buy later when home prices are higher, which will cause the monthly payment to be higher, or buy now when home prices are slightly lower, but it's a higher interest rate? We can always refinance into a lower interest rate. We cannot change the price of homes. All right, what's coming up next week? Next week is not as big of a week as this week it was, but there's still a lot of important things. We've got a lot of home data coming. So we're going to get existing home sales, we're going to get new home sales, we're going to get consumer sentiment and jobless claims. That'll be an indicator towards unemployment. So we'll take a look at all of that next week. Tomorrow, Casey, we've got a homebuyer class that's on Saturday. We've got more coming up in the future. We've got a meetup page. Feel free to join. The link will be below if you'd like to do that. Now, Casey, we are making
my favorite part.
We're making YouTube videos, and you have to make thumbnails. So I'm going to show you what I was trying to create this week.
Okay.
And then I'm going to show you what AI did to me, which ended up me looking like Fabio, or even worse if you consider it. So the goal was this thumbnail. Do you see this guy right here? He's a handsome fellow.
Yep.
I heard about this thing.
Face.
Yeah, I heard about this AI app called ClipDrop.io or ClipSwap, and anyways, they have a face swap feature. They will swap your face. So I thought to myself, instead of me having to try and have somebody take a photo of me looking like this, maybe I can just face swap myself onto it. So I used this, and here's the photo I gave the AI to use. Okay.
Great.
And then this is the photo that I was trying to swap, and here's what happened. Okay, try number 1. I'm too cool for school. Yeah. Try number 2. Came back as definitely Zoolander Blue Steel. I don't understand why it needed to. So embarrassed. Why are we showing people this? Okay, number 3 was, oh my gosh, this is the smolder. Look at that. Okay, here, that's Blue Steel. This is. Oh my gosh. Okay, but then it decided no, you need to be Fabio, and it gave me this. I don't even know what to say to that. Okay, but then I was like, you can do better, AI. So I clicked. Look, I'm not giving it any directions. I just clicked the next button. Like, it was like, please try again, and then it did this for me. It was like, hey, there's a trending style right now of hair. It's called a mullet, and it gave me one. It gave me one. Needless to say, Casey, the thumbnail still looks. This is how the thumbnail still looks. You want me to? No. You want me to go with this? Oh my gosh. I don't know either. Okay. Well, we're teaching homebuyer classes, both virtually and in person. Feel free to join us. You're more than welcome. We love teaching them, and it really helps a lot of people out. We'll see you next week when we go over housing data. Have a great week.